You added Legg Mason, known for a great active management, to finish your portfolio. It wasn't the first acquisition that Franklin Templeton has done. Obviously, Franklin Templeton became out of the merger of Franklin and Templeton. Do you think small shops are going to be able to compete in this era of lower fees and greater economies of scale?
Yeah, what I'd say is we're seeing much more of the long-awaited, long-predicted consolidation in the industry with big deals. I can tell you I am squarely focused on making sure that the integration of Legg Mason and Franklin Templeton works. And various people have different reasons for their deals. Ours is a growth story. It's about having an all-weather product lineup. It's about diversifying our client base. And frankly, at $1.4 trillion, it gives us more to be able to invest in things like technology tools for our clients, as well as data science and data analytics for our investment teams.
I guess it's the problem or the dilemma of every company in this space. I would guess that if you were a smaller firm, you really have to stand for something to break through and be able to do it. And I'm thinking of a shop like Ariel, which stands for socially responsible investing, or Calvert. When you get into the land of the giants where you reside, what do you have to stand for? What do you stand for at Franklin Templeton?
I think you have to stand for excellence in our case, it's active management. I mean, we double down in active management, and we're big believers that the next decade isn't going to look like the past, and that active management is going to thrive. And we have a number of different investment teams. They are very much independent, but we can build that on a base of investment in technology, in risk management tools. And so I think it's, standing by excellence.
So make the case for active management, because an awful lot of people and some of the results, many of the results over time indicate that passive management over a long period of time outperforms the active managers. Why do you think, why are you doubling down on active managers? And why do you think now is a time where active may be able to show greater value?
Yeah, look, we're coming off a decade of unprecedented government liquidity pumping into the economy globally, and zero or negative interest rates. So where were you going to put your money? You put it in the equity markets. And so you saw very little, differentiation in performance. And active managers thrive on volatility. We thrive on dislocation. You saw active management outperform in March when the market tanked with the lockdowns and COVID. And so if you think about the next decade, there's no way that you're going to be able to continue that same kind of stimulus. And frankly, it's going to be a decade of digesting what has happened in this past decade. And we think that that's going to be where active management is going to really be able to perform.
And do you think that the knock on active management, and I don't mean to sound like a hair shirt here, but the knock on it has been that while they can outperform over certain periods of time, the ability of an individual manager or team to do that over and over and over again long term is really minimized.
Yeah, again, I think that you have periods like this past decade that people become complacent in understanding where active management is so important. You look at, I describe the analogy of saying, if you're driving a car down a straight and well-paved road, you don't need a lot of the safety features. But if you're going to head to the mountains and you get a snowstorm, you're going to wish you had those safety features. And that's what active management is. It's risk-adjusted returns. It's setting yourself up for the unexpected and making sure you have that diverse portfolio. And again, taking advantage of those opportunities when they exist. People are talking about a K recovery right now. That means that some sectors are very much going to outperform and some are going to underperform. It's the active manager that can select which one is going to be the outperformer.
Shepard Smith here. Thanks for watching CNBC on YouTube.